With COVID-19 infections rising unabated under fragile macroeconomic and financial conditions, we propose to undertake additional developmental and regulatory measures with several objectives, and they are as follows. Number one, to enhance liquidity support for financial markets and other stakeholders. Number two, to further ease financial stress caused by COVID-19 disruptions while strengthening credit discipline. Number three, to improve the flow of credit. Number four, to deepen digital payment systems. Number five, augment customer safety in check payments. And number six, facilitate innovations across the financial sector by leveraging on technology. The first one relates to additional special liquidity facility. Additional special liquidity facility of rupees 10,000 crore will be provided at the policy repo rate to the NABARD and to the National Housing Bank, and this will consist of 5,000 crore to National Housing Bank NHB to shield the housing sector from liquidity disruptions and augment the flow of finance to the sector through housing finance companies. And it will also consist of 5,000 crore to the National Bank for Agriculture and Rural Development, that is NABARD, to ameliorate the stress being faced by smaller non-bank finance companies, NBFCs and macrofinance institutions in obtaining access to liquidity. The next announcement relates to resolution framework for COVID-19 related stress. Accordingly, it has been decided to provide a window under the June 7 prudential framework of the Reserve Bank, that is June 7 of 2019. Under that framework, it has been decided to provide a window to enable lenders to implement a resolution plan in respect of eligible corporate exposures without change in ownership, as well as in respect of personal loans, while classifying such exposures as standard assets subject to specified conditions. In the light of past experience with regard to use of regulatory forbearance, necessary safeguards have been incorporated, including prudent entry norms, clearly defined boundary conditions, specific binding covenants, independent validation, and strict post-implementation performance monitoring. The underlying theme of this resolution window is preservation of the soundness of the Indian banking sector. The Reserve Bank is also constituting an expert committee with the chairmanship of Shri K.V. Kamath, which will make recommendations to the RBI on the required financial parameters along with sector-specific benchmark ranges for such parameters to be factored into resolution plans. The next announcement, that is the third one, relates to restructuring of MSME debt. A restructuring framework for MSMEs that were in default but standard as on January 1st, 2020 is already in place. The scheme has provided relief to large number of MSMEs. With COVID-19 continuing to disrupt normal functioning and cash flows, the stress in the MSME sector has got accentuated, warranting further support. Accordingly, it has been decided that stressed MSME borrowers will be made eligible for restructuring their debt under the existing framework, provided their accounts with the concerned lender were classified as standard as on March 1st, 2020. This restructuring will have to be implemented by 31st March 2021. The fourth announcement relates to advances against gold ornaments and jewellery. As per extant guidelines, loans sanctioned by banks against pledge of gold ornaments and jewellery for non-agricultural purposes should not exceed 75% of the value of gold ornaments and jewellery. With a view to mitigating the impact of COVID-19 on households, it has been decided to increase the permissible loan to value, what they call LTV ratio, for such loans to 90%. This relaxation shall be available till 31st March 2021. The fifth announcement relates to banks' investment in debt mutual funds and debt exchange traded funds, capital charge for market risk. As per RBI's extant Basel III guidelines, if a bank holds a debt instrument directly, it would have to allocate lower capital as compared to holding the same debt instrument through a mutual fund or exchange traded fund. It has been decided to harmonize the differential treatment existing currently. This will result in substantial capital saving for the banks, and it is also expected to give a boost to the corporate bond market. Number 6. we have a review of priority sector lending guidelines. With a view to aligning the guidelines with emerging national priorities and bring sharper focus on inclusive development, the priority sector lending guidelines have also been reviewed. An incentive framework is now being put in place for banks to address the regional disparities in the flow of priority sector credit. While higher weightage will be assigned for incremental priority sector credit in the identified districts having lower credit flow, a lower weightage would be assigned in identified districts where the credit flow is comparatively higher. Priority sector lending status is also being given to startups, and the limits for renewable energy, including solar power and compressed biogas plants, are also being increased. There are other measures that are being announced today, and I shall be very brief. Number one, introduction of an automated mechanism in e-Kuber system to provide banks more flexibility and discretion in managing their liquidity and maintenance of cash reserve requirements. Number two, while permitting lenders to provide relief to the borrowers through various measures, it is also considered necessary to take appropriate measures for strengthening credit discipline. In view of the concerns emanating from use of multiple operating accounts by borrowers, both current accounts as well as cash credit or overdraft accounts, it has been decided to put in place certain safeguards for opening of such accounts for borrowers availing credit facilities from multiple banks. Number three, the Reserve Bank has constantly endeavored to encourage responsible innovation by entities in the financial service sector. In order to further promote and facilitate an environment that can accelerate innovation across the financial sector, the Reserve Bank will set up an innovation hub in India. Further details about the innovation hub would be announced in due course. To enhance safety of cheque payments, it has been decided to introduce a mechanism of positive pay for all cheques of value rupees 50,000 and above. Operational guidelines in this regard will be issued separately. And finally, a scheme of retail payments in offline mode using cards and mobile devices and a system of online dispute resolution mechanism for digital payments will also be introduced.